You know, it's been a long time. We always quote oil prices. We don't often look at natural gas. We talk about natural gas, for instance, in the case of Russia and the role it plays in terms of supplying China or Europe and those geopolitical aspirations. But natural gas is typically a local pricing mechanism, and therefore you have to look at investing in that area locally. Mark Lackey is joining us, Executive VP at CHF Capital Markets. Am I right in saying that?
You know, that's a very good point, Pat, because if you look at gold, silver, any other commodity, they're priced in the same price in the whole world.
And yet, maybe oil's different, Brent versus West Texas.
Yeah, Brent versus West Texas, and there has been, typically when I was in the business, there was no margin there. There's been, as you know, Brent's been trading at a higher level than West Texas for the better part of the last few years for infrastructure issues.
Yeah.
But natural gas is completely different. For example, $4 in North America right now, between 6 and 8 in Europe, and anywhere from 13 to 16 in Asia. So because it's difficult to transport it, and it's been more of a local market, that's the reason we have these, and the supply conditions and demand conditions are different. We don't have the equalization that we have everywhere else in most commodities. So it does make for an interesting analysis because far too many people don't look at the opportunities that maybe they're missing in Europe and China.
Yeah, and I guess liquid natural gas will change that equation. But talk to me about the price for natural gas right now.
Well, in North America, we're sitting around $4, Pat, and I did point out in my blog yesterday that...
Million cubic feet per million cubic
That's right, that's right. And we've just seen an injection of 1.5 trillion in the last 2 months. That's the biggest number going into storage in the U.S. in this time period, June and July, since 1994. Now, one of the reasons, Pat, there's two reasons. There's been a lot of success in the Marcellus area, as you know, northeastern U.S. The shale gas there has exceeded expectations. It's made the owner of the Buffalo Sabres example extremely rich. And so you see these opportunities, and plus what's also happened, it was the cold, I went back and checked, it was the coldest summer in the US in June and July, pretty much from Texas to New England in the last 5 years. So electricity demand subsequently is back to where it was 5 years ago. So you've had weaker demand, higher supply, injections have grown. It's not surprising that the price of natural gas has come down about 12 to 15% in the last 2 months. I think it's going to level off here in the United States and Canada for the next 6 months. So there's still some decent opportunities for Canadian investors, but I would suggest that if you're going to diversify, you should be looking at places like China, where you've got a price between $13 and $16. Of course, there's a lot of supply and demand reasons for why that's the case.
Yeah, exactly, because it's all used for electricity.
Right.
But if the global economy continues to slow down, that whole picture could slow down as well.
Well, a little bit, Pat, but here's the other flip side to this. 75% of the electricity in China right now is produced by coal. Now, there are critics out there that say the Chinese don't care about their air quality. I beg to differ. You talk to any of the senior people from China, they're trying very much to improve their air quality. They know the problem is the old coal plants that use lignite.
Oh.
It's not the new plants that use high-quality coal. Sure, that's not perfectly clean, but it's not bad. It's the SO2, CO2, NOx from the old plants. Their proposals are to try to go more nuclear and to go to natural gas. And they want to move natural gas, Pat, from about 2.5% of their needs up to 8% in the next 5 years. Well, if you work the numbers out like I did, that means the demand for electricity, or the demand, for natural gas increases by 5-fold over that time period. So even if their economy is not growing quite as quickly, it's not the issue because there's more of this substitution effect of natural gas for coal that's going on that's really going to continue to keep those prices high.
But again, that's a local function of what's happening, and that's why they did the deal with Russia.
Absolutely. As you know, they've got a pipeline deal with Russia. Now, a few people phoned me up and said, doesn't that worry you about prices? Well, the gas won't flow till 2018. You know, I'm not looking out 5 or 6 years so much. I like to look out 2 or 3 years, have a better handle on what I think is going to potentially happen. Because once you get out 5 years, I mean, if you went back 10 years ago and said you'd have fracking techniques and everything else you have in oil and gas today, you never would have predicted that. Yeah. So I think it's important to have a relatively short time period. And over the next 2-3 years, I think that gas prices stay high in Asia.
Yeah. And liquid natural gas has probably got the same kind of a timeline.
Absolutely. I mean, that's right. We've seen even some opposition to that. So I think if we get out 5 or 6 years, you have to reevaluate your portfolio. But I'm only worried about what I'm going to buy here that I think is going to move in the next 2 or 3 years.
Okay. So against that background, Prime Line Energy Holdings.
Right. Now, we mentioned this one, Pat, a couple of times when it was at 45 cents, then again at 55. Now it's up at 70. So a few people have said to me, hey, Mark, that's a great move. Well, it's only scratching the surface here, Pat, because if you've followed this company, they're now at the point where they're putting all the pipe in place. They have a deal with CNOOC. They're going to be shipping the gas here as soon as all the testing is done. And testing could take a month. I mean, it's, and so I would say sometime in September, gas is going to flow into the system. And the analysts that follow this feel that the target prices are well over $2 in the next year. Now, again, I'm not an analyst, but I think that probably what they're saying makes a lot of sense because there will be earnings and cash flow of 25 cents, earnings probably of 20 cents over the next calendar year.
Is there a discount because of the political situation surrounding China?
It's interesting when people say that to me because I looked high and low to find a junior in the area because you could buy Husky. They're shipping gas into China. You could buy CNOOC itself. It's done very well on the New York Stock Exchange. So I would say the political risk is overdone because China's looking for the gas, the price is there, and the big thing with Primeline is that once CNOOC became their partner in the past, that de-risked the whole project. Before they had CNOOC, yeah, okay, I would say that you had certain risks. But when you've got the biggest guy in China who wants to find gas and ship gas, they like to have deals with people like Primeline. And I should point out they're doing 3D seismic, so their whole land, I mean, they're only producing from a very small part of it right now, Pat. There could be terrific potential. I mean, I think this is, along the lines of some of the plays that I recommended in Western Canada in the last couple of years that have had great success.
Okay. Greenfields Petroleum Corporation.
Now, here's another one, Pat, that's kind of gone up marginally. We mentioned it once before. Now, they're in Azerbaijan. I know some of you are going to say in the last week there's been a little bit of fighting between Azerbaijan and Armenia. That's been kind of ongoing the last 20 years, but those are small border issues that then flare up and then they go away and they're nowhere near the oil and gas areas. But I do point that out because some people have expressed some concern. Azerbaijan, to me...
Does the stock go up and down?
No, it wasn't affected at all.
Okay.
So I think that's a good point, Pat, that you're making because that's important for people to know that there's a bit of a flare-up last week. Mr. Putin got involved. The Turkish president got involved. It seems like that ended the problem. So I think it's important for people to recognize that while there are some problems in the world these days, this particular flare-up was a minor problem and not to be distracted by it. Because Azerbaijan is a very rich area in oil and gas. Greenfields has gone back into old properties and drilled for both oil and gas, much along the lines of the guys in Alberta have gone into the Cardium. And so the property has gas and oil. What you couldn't do in my day in the oil business was find that oil or get it out efficiently. But with the improving technologies, this makes a lot of sense to me that a lot of Texas oil today is coming out for the same reason, Pat, that it's an area that you couldn't get in the past. So Greenfields is going in, they've got production, they will expand it. Azerbaijan sells into Russia, they sell into other parts of Europe, and they have not been affected by the Ukraine-Russian issue at this point in time, and I don't think they will be.
Are they using fracking, Greenfields?
Yes, they do. There's fracking there, there'll be bidirectional drilling, horizontal drilling, everything that you can think of, they're involved in with the technologies that exist today.
Okay, and then the last one is Emerald Bay Energy.
Now, we mentioned Emerald Bay a few months ago as an oil
remember
pay.
that one. Yeah,
that's right, in Texas. What I wanted to point out, though, Pat, is that they also have gas in Alberta. Now, what I like is their deal is they're selling all their gas into the electricity grid. And when you're not a big producer, you can do that. So there's a big advantage there because it's a take-or-pay contract. They will have specific prices, which means that you're not going to be hit by all the volatility in the marketplace. You're going to get a pretty good price for the product you're selling.
Contracts, what, 3 years long kind of thing?
Absolutely, usually. And the reopeners after that, and they can work them sometimes longer or shorter depending upon the offtake agreement that you have with the particular utility. But what I like is the cash flow is going to start this month. And so now this is another way that the company is going to generate cash flow. It won't have to raise more money or a lot more money than to do some of the work in Texas. So you've got kind of both sides here, a gas and an oil play, but an interesting gas play because I like the fact they've got a contract with the utility.
Okay, Mark, 3 good ideas.
Thanks, Pat.
Mark Lackey joining us with CHF Capital Markets.